Hey guys, what's up? This is a new series I am starting where basically I just send myself posts on Instagram and review them for Slop or Finance Slop and decide, is this something real or is it a copy and pasted 10,000 times over random nonsense or just totally wrong and meaningless. So basically what I'm going to do is every once in a while I'm just going to send myself a whole bunch of posts and then go through them one by one and talk about, is this actually something decent or is this total nonsense? And feel free to follow me on Instagram and send me stuff that you think is total nonsense, and I would love to check it out and review them. So anyway, let's get into it. So first off, 3 stocks that took me to 100K by 24. Based on the 3 stocks that are in this video, she probably had to deposit, or she's like 30 years old now. That could be true. She probably had to deposit way more than 50% of this. Just starting off. Okay, already young people get trapped into high dividend ETFs and stocks so easily, and it's because they think of dividends as free money. And if you are in SCHD and you get 100K by 24 years old, there's something else going on there. You deposited 95,000 of that 100K. It can't happen. Taxes will ruin you. NAV decay will ruin you. Where the stock price goes down when you get a dividend, that's what NAV decay is. And it just performs worse than a regular S&P fund. So, yeah. That is correct. Sorry, bad pause. That's correct. Yes, pretty nice. Younger people, stay away. If you're looking for income, which you should only be doing after years and years or decades of capital appreciation, then it's probably an alright idea. Still gonna get taxed, and if you sell it, you'll get double taxed, but still pretty decent. Okay, great choice. A lot of people go with QQQ, but QQQM is significantly better for long-term holding. Genuinely, it's a little silly, but there is a 0.03% difference in the fees between QQQ and QQQM. Not huge, but if you're holding it for a retirement type deal, it'll probably save you thousands of dollars in 43 years or however old you are. So pretty solid. The problem with this one is what comes after this one. Okay, great one to hold, especially if you're literally just holding one thing. I know a couple people who just own broad single ETF, and that's it. VTI, fantastic. The problem with VTI is that because it's weighted based on size, this and QQQM, the last one, as well as SCHD, have a significant amount of overlap. The largest companies in VTI are basically US tech stocks, aka the major holdings of QQQM. So while it's a very good fund to hold, pairing it with something that has, if we bring up my good old Claude here, if we bring up Claude right here, you could see by the weighted overlap, 40% of your money is essentially redundant because they have the exact same holdings for a very large portion. So is it a good investment? Yes. Paired with another broad fund? Not really, because it's basically just putting your money into the same thing twice instead of just putting your money into that thing. Tech exposure, US exposure, QQQM, broad market, safer, lower volatility, VTI. That's what we have. Anyway, overall, pretty decent ETFs. Can't really complain too much, but just a little bit of a, I would give this a 3 on the FinSlop scale. There we go. Next up. Okay, first of all, if you research a stock in 1 minute, you have absolutely no desire to make money ever. Yeah. Second of all, this is a platform just advertising itself. It's not a guy. Nvidia as an example, automatic +1 in FinSlop. I don't even know what to say for this. Market sentiment, occasionally it makes sense, but on this random app, I wouldn't trust it. A stock can have thousands of mentions on social media, especially Nvidia, which is probably why they use Nvidia as an example. Doesn't mean a whole lot unless there's actual news coming out. People talk about Nvidia 20,000 times a day, and it means absolutely nothing. Okay, next one, insider trading. Is insider trading sometimes important? Yes. However, there are so many companies that just have structured buying and selling periods with insiders that would rather not have 90% of their net worth in one single company, that just force them to sell at certain times or inversely buy at certain times. So, does it have a little bit of value? Yes, especially if it's like a company that got a brand new CEO and now that CEO is buying a ton of the stock and whatever else. But I would say 80% of the time, insider transactions are mostly just people dealing with their own personal finances and doesn't actually have much of a material effect on the company at all. No thanks. All right, next up, we got this guy. My stock portfolio as a 22-year-old working in finance. First of all, dripping out of his mind. Nice. Interesting. Canada, gross. ZQQ, Canada again, a little gross. I'm getting a recurring theme that this guy might be Canadian. No thanks. Next. All right. First of all, we'll see. I don't know how I'm getting so many Canadian investors today, but the Canadian stock market has massively underperformed the US market just in general, no matter what. So this doesn't make a ton of sense to invest in unless you really like banks in Canada. That's about it. Okay, not bad, but VFV as a broad US fund is ridiculous. Just as this comment right on the top here says, these ETFs kind of suck. There are so many better options: VOO, SPY, QQQ, the low fee versions of all of those, basically anything. I don't know why anyone would choose VFV. That's all. Okay, once again, absolutely diabolical pool for a ETF example. So many different things that you could rather put your money in. Again, QQQ, tech sector, perfect. XLT, I don't know. I don't know, man. This is interesting to say the least. QQQ, generally tech dominated, best fit for you, or XLK for true sector specific. TEC makes no sense. Anyway, that's it. I'm assuming the video's over. All right, next up. All right, first of all, correct, absolutely. This guy does know what he's talking about with ETFs. The one thing I will say is that the ripoff category has so much more liquidity and volume than the keeper category. So there are different purposes. If you're trading options based on those ETFs, it's much better to use the non-lower fee versions. If you're holding them long-term for retirement, use the M's. Great idea. Anyway, every single other ETF on this list, for example, I just don't like SCHD. Dividends, whatever. If you're looking for income and you're an older individual, go for it. But other than that, whatever. Everything else, don't have an opinion on. Next. Okay, first of all, having cash to flex day trading, already enormous red flag. Doesn't make much sense at all. Okay, that's complete total nonsense. A green candlestick means that the closing price of a candle is higher than the opening price of a candle, and a red means the opposite. Has absolutely nothing to do with bullish or bearish, other than, I guess, bullish means up, which green candles are sometimes up, but technically they don't have to be, depending on what the opening price of that candle is, and red candles go down. I don't, the total meaningless for bullish and bearish in this specific context. Okay, yeah. Onward. All you have to do to profit, guys, is profit, and that's it. It's honestly that easy. I don't know why more people don't do this, but the stock market, if you just make money, you'll make money. It's that easy. Anyway. Okay, whenever you see a strategy detailed with just a zigzag line, it almost always is total nonsense, and we're about to see that in action. Okay, I love examples of technical based trades because are support and resistance levels a genuine trading strategy? Absolutely, yes. However, this is a hindsight bias, which means you're just taking a moment in time and drawing something and then showing it. And technically, this could be literally anything that you just find a rectangle that matches up to it. So realistically, this example is totally meaningless. And yeah, technicals work a lot of the time, especially if you're disciplined with it. But this specific example, just this trade was over $1,000 in under 10 minutes. How do we know that? There's no way to know it. Anyway, continue. All right. So this is very clearly appealing to people that don't have a ton of market knowledge. Now, for me specifically, I don't have a ton of futures knowledge, but I know enough about it to know that it is vastly more complicated than this is letting on. So probably not the best link to go to. Probably don't want to give them your money. I would say don't even get into day trading in the first place. 99% of people are going to lose. And yeah, anyway, on to the next. Okay, first off, immediately, 8th graders are not allowed to trade. You cannot trade when you are not an adult. It can't happen. So I don't know what to tell you, man. This is actually brilliant, and if you do teach people young that investing is kind of just like a game that you can play, it would probably work out very, very well. That first part of the post, though, it makes no sense. There's no way. Maybe, but there's no way. Literally cannot happen. Physically cannot. This is illegal. Again, literally illegal. Continue. It's a screenshot with a $2.68 profit and a $28 profit. Anyway. Okay, that clears it up a little bit. I just don't see how this is still possible. It needs some kind of proof. I'm going to go ahead and say early prediction. This is some kind of link that they want you to click on. Yeah. Okay. By the way, to sign up for a class, I don't know about this, buddy. I'm going to go ahead and say this is 9 out of 10. Finn Slop doesn't make a lot of sense, and there is no possible way they have 100 8th graders day trading making $1,000 a day. It's just not happening. Anyway, next. Yep. A lot of people don't realize that stock price means absolutely nothing. So let's continue. Okay, this post is the first post of the day that I would say actually makes sense and isn't total nonsense slop. So, congratulations, actually pretty good. Onward. Okay, I can't stand these posts because if you have $1,000 and you diversify it into anything that isn't just maybe one ETF, it doesn't make a ton of sense. When people put like $100 into one thing, that is not going to do much at all for years. So I would say if you're anything under like 5 to 10,000, just put your money into an ETF, let it sit, build it up recurring investments over time, and that's probably your best bet. And when you have a larger portfolio, then start getting into individual stocks when you have a bit more risk availability and you could actually do more with it. But anyway, let's actually see what she said. Okay, interesting. Okay, once again, we are seeing the classic SPY and QQQ combo. These stocks have 86 to 89% of the exact same companies. QQQ has less holdings in it technically, so the actual overlap is lower, but you're basically just buying the exact same major large companies twice in two different places, and it doesn't make a whole lot of sense. A lot of people like to do this. I just don't see the point. Buy one or the other based on which one you want more. There's really not a ton of reason. And before you say, oh, she said QQQM, it's the exact same thing. One just has lower fees and the other has higher liquidity and volume. Okay, is this a good investing strategy? Yes. Generally, if you like a company, other people like a company. However, $400 going into multiple individual companies is not the best idea. I understand this is like getting started, but again, at the end of the day, putting that little amount into individual stocks just doesn't make a lot of sense. Put all your money into the ETFs and let it sit for a while. Recurring investments, then you can build up individual positions. Until you have a decently sized portfolio, it does not make a ton of sense to do individual stocks. Anyway, onwards. Okay, finally, we will look at these. Now, these are her individual stocks that she's talking about. Both QQQ and SPY both have all of these companies, or at least almost all of them. So you're getting exposure to the exact same things twice for possibly 3 times for basically no reason. Yeah, I have no idea. Anyway, I believe that's all she says. Time for the next. Okay, this guy just exposed you to 7 ETFs that are really, really cool. Some of them I didn't even know about. The genomics one, didn't even know that existed. Pretty good idea. Definitely check this guy out. It seems like he actually has a little bit of knowledge of what he's talking about. Awesome ETFs. 0 out of 10 fin slop. Gotta love it. All right. First of all, this post is awesome when you watch the whole thing. It is so vitally important to educate children early about investing. So seeing something like this is just awesome to watch. All right. Once again, amazing that he's investing that early and actually being properly educated. No link to be found here, so we know this isn't just selling something, a course or whatever. This kid's just being interviewed on the street. Pretty cool, pretty awesome to see. Anyway, let's continue. All right, first of all, if you ever see a video about investing that starts like this, I'm just gonna go ahead and say turn the video off. Yikes. Red flag instantly. All right, this is a great example of total bullshit. Indicators are good references in real time. In hindsight, they make everything look like it has a 100% win rate. This would never work in a live trading environment, and this is essentially just completely a scam. Do not recommend. 98% of indicators are total nonsense that just use screenshot and hindsight bias to try their best to trick people who don't know enough about trading to actually understand it. Totally meaningless. That's all. Let's see if there's any other nonsense in this video. Okay, so 10 out of 10 on the slop meter. Complete nonsense. Don't touch. Probably the whole account is like a slop account if I had to guess, and this has 31,000 likes, so great job, guys. That's all for today. Thanks for watching. Try your best to avoid fin slop whenever you get a chance, and see you next time.